Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Thursday, September 27th, 2018. I am your host, Dan Russo, the chief market strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. I'm also on StockTwits at the same handle. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive PowerFeed for free, delivered to your inbox in time for you to follow along with this show every day. Head over to chaikinanalytics.com/PowerFeed TV. So U.S. equities closed lower in Wednesday's trading, with much of the drop coming in the last half hour of the day. Treasuries were stronger with some curve flattening, and the dollar was better on the euro cross, but down against the risk-sensitive yen. Gold finished down 50 basis points, and oil was weaker after data showed a U.S. crude inventory build last week. WTI settling down about 1%. Breadth on the New York Stock Exchange, negative 1.7 to 1. Breadth on the NASDAQ, negative 1.8 to 1. Your outperformers were communication services. Some of the big names in that group really held up. Healthcare, that emerging leadership group that we've been talking about, consumer discretionary, consumer staples, and industrials. On the underperforming side, financials got hit as rates went lower, consumer staples, consumer discretionary rather, off. Utilities down about 1%. Materials, energy, and tech all underperformed. And as we arrive at the desk this morning, futures are pointing to a slightly higher open, up about 10 basis points. Asian equities were mostly lower overnight. Japan actually lagged, was down nearly 1%, and Europe is weak this morning, with Italy a notable underperformer. Treasuries are unchanged to slightly higher after the rally yesterday, and the dollar is stronger on the major crosses. Gold is flat. WTI crude is up over 1%. And as we kind of look at the structure of the market here for the S&P 500, I'm going to call it we're testing near-term support. We are below that 29.15 level, by about 10 points. I'm going to give it some time to play out. So we'll call it testing. I'm not ready to call it broken support just yet. Below that, 28.73 is the breakout level. 2800 is round number support. And then 27.54 is your rising 200-day moving average. Those are the key levels we're looking at on the support side. And resistance comes into play near Friday's highs at 29.40. So we'll call it a 29.40 to 29.50 support zone because as we're trading near all-time highs, we need some time to kind of carve out key levels on the upside. RSI remains in bullish ranges, so that is encouraging, even with the sell-off yesterday. And really over the past 4 days in the red, you could see that barely a dent to the RSI, down to 56, still holding within bullish ranges. So that is encouraging. One thing we are watching is Chaikin money flow, which remains bullish, but is declining. So we'll have to see if it's a similar dynamic to what we saw back in late August. Was it a slight dip? Do we actually get below? We're watching how this plays out, obviously watching it closely. But right now, no real need to change strategy in terms of our view on the equity markets here in the U.S. Bullish view with a favorable leaning towards large caps. Your market in a minute. PowerFeed subscribers in that email every day. I'll give you the 5 bullets, the keys to what I'm writing about in my daily note. And today, obviously, we're talking about the late day sell-off that took stocks into the red yesterday following the Fed's rate decision. Also, rates fall following the Fed decision. That's the tradable rates. Breadth measures do remain bullish in the U.S., and they're actually improving abroad. It's Thursday. We look at market breadth. Things still look solid here in the U.S., and we're actually seeing a little bit of a pickup across the globe. I look at 33 different country ETFs, and currently 9 of them are above their 200-day moving average. About a month and a half ago, only 3 were, and even last week, 6 of them were. So we are seeing an improvement in global market breadth. Healthcare equipment, one of the groups that we've liked a lot, is oversold with bullish money flow, and then futures do point to a higher open. The major indices from a power bar perspective saw a little bit of deterioration yesterday. Dow 8 bullish or very bullish stocks, 0 bearish stocks. S&P 500 114 bullish or very bullish stocks, 72 bearish. NASDAQ was actually flat to slightly up yesterday, and that ratio still remains skewed better than 2 to 1 in favor of the bulls. But look at what's happened to small caps now. Small caps, with the underperformance yesterday, the power bar ratio is actually turned bearish. 299 bullish or very bullish stocks, 334 bearish or very bearish stocks. We've been watching this trend unfold. We've been favoring large over small, and that is playing out. There's the uptick in bonds. According to the Chaikin Power Bar, small cap stocks are somewhat more bearish than large cap stocks, and the major indexes are in fact mixed. Our stock of the day, every day for PowerFeed subscribers, we generate a potential idea for you based on our proprietary Chaikin Power Gauge rating. Today's idea is Aaron's Inc. Ticker symbol AAN comes from the non-food retail wholesale area of the market. That's a group that we've liked. Closed at 54.22 yesterday, up 63 basis points, so some nice outperformance. Has a very bullish Chaikin Power Gauge rating due to very strong earnings performance, attractive financial metrics, and positive expert activity. So let's take a look here. Very bullish stock, strong trend, strong industry. Ribbon at the bottom of the screen. Look at where we were a year ago. We were neutral and bearish, and then we slowly started to turn bullish. And now we're bullish, and the market and the model are in agreement. We're actually very bullish. Market and model are in agreement. Stock is outperforming relative to the SPY. The dynamic duo is in gear. So that's kind of what we like to see. However, stock is closer to overbought than it is to oversold with this recent run higher towards $56. So what we want to see is some consolidation here in the 54 to 56 zone to work off this overbought condition, wait for the stock to become oversold. Money flow is bullish. We're above the rising long-term trend line. Obviously, Aaron's looks interesting, ticker symbol AAN. I just don't like the setup here now, just given the fact that it is so close to overbought conditions and the market is under a little bit of pressure the past few days. Let's keep an eye on Aaron. We'll add it to a bullish watch list and wait for a better entry. Taking a look at our sector tracker now, movement of the major sectors over the last 5 days. Energy still benefiting from the recent pop in oil. Healthcare, we looked at equipment yesterday, our industry in focus. Our industry in focus today is services. Healthcare is that group that we've been looking to as emerging leadership, and it is kind of living up to the billing for now. That new communications group, having a nice few days, as well as technology. What's interesting to me is the big cap tech names that fall within these two groups. Names like Apple, names like Google, names like, Amazon's consumer discretionary, but even Facebook has caught a bid the past few days. That's strong leadership. Still the largest, tech is still the largest weighting in the S&P 500. We want to see that continue to do well. Continue to fade staples on any rallies, and our bond proxies are at the bottom of the list. Utilities and real estate continue to underperform as interest rates move higher, notwithstanding the move down. Yesterday, following the Fed announcement, the move down did, though, impact financials. Financials were the worst performing sector of the market yesterday. We want to see financials rebound with rates. So as I said, our industry in focus is healthcare services, and we could see here 19 bullish or very bullish stocks for only 2 bearish or very bearish stocks. And over the last 6 months, the healthcare services subsector has outperformed the S&P 500 by nearly 7.75%. Power bar ratio, which measures future potential, is very strong with more bullish than bearish stocks, and it's currently ranked number 2 of the 21 subsectors that we look at. The strongest subsector is actually healthcare equipment. Some of the indicative names here in the services group: WellCare, WCG, has a very bullish rating. Cigna, ticker symbol CI. If you recall, we looked at this one a few weeks ago, and that we liked it on the long side on this show, and that stock has just really done well since then. Continues with that very bullish power gauge rating, and Express Scripts has a very bullish rating, but that one is somewhat of a special situation in terms of the M&A activity. So let's take a look at one here. Let's take a look at WellCare Group, ticker symbol WCG. Closed at $307.24 yesterday, up 1.3%. So some nice outperformance. Very bullish stock, strong trend, strong industry group. We can see here, stock's been bullish or very bullish since mid-April, and it's been outperforming the market since that time frame as well. So dynamic duo in gear, market and model in agreement. Stock is oversold. We've seen a slight downtick in money flow, but just look at the bullish intensity relative to the bearish intensity. So while I'm going to keep an eye on this one, it's not as concerning to me right now, especially if we take a weight of the evidence approach and we roll up everything else that we're looking at. In addition, past 4 quarters, earnings have surprised to the upside. Stock is above a rising long-term trend line. It's pulled back to our short-term trend line, the 21-day moving average, and kind of holding support at $300. I think WellCare is interesting. We have a very bullish stock and a strong trend and a strong industry. It's outperforming the market and it's oversold. Kind of call it a consolidation within an uptrend. I think WellCare Group is interesting as a long idea. Ticker symbol WCG. S&P 500 movers yesterday. On the gainer side, Alexion gains 5% as the market likes a little bolt-on acquisition that they made. Foot Locker up nearly 4.5%. That's on the back of some positive pricing comments from Nike's conference call. Viacom up nearly 4% as it caught an upgrade. SCG up nearly 4%, 3.8%. 3% to be exact. No real news driving that one. And Under Armour up over 3% following the Nike print. Cintas CTAS down 5.5% following their earnings announcement. No real news on EQT to take that one down 5.5%. Newmont was a bearish stock for us on Monday in my daily note to Chaikin Analytics members, down 4.5%. As they said, they are not bidding for Barrick or Randgold. No real news on Devon, taking that one down 4%. And Arista Networks was initiated by a sell-side bank with a neutral rating. We have it as a bearish rating. That stock was down 4%. So as we kind of look through some of the major movers and what happened yesterday, rates fall following that FOMC decision. Here's that chart. We've seen it. The 10-year U.S. Treasury note yield index ticked up near the May highs at 3.1% and is now kind of rolled over back to 3.06%. Still above an upward sloping 50-day and 200-day moving average. RSI for the yield has not become oversold, really. I mean, we came close back in June, but pretty much for the past year has not become oversold. It was overbought with the recent move higher, so a little bit of a pullback, shouldn't be too much of a surprise. As we've said before, we continue to think the path of least resistance for yields is higher. The implications for the equity market is obviously pressure on the bond proxies, real estate, and utilities should be a benefit to the financials based on our correlation work. Let's kind of watch what happens here, see if we can get another push through or back to 3.1%. The breadth measures that we look at remain constructive. I'm going to show you one here. This is the percentage of S&P 500 stocks currently above their 200-day moving average, and it's at 65%, and it's roughly been following the path of the S&P 500 higher. That is a bullish breadth confirmation as far as I'm concerned. But what's also interesting, and I go through obviously a deeper detail in my note today for Chaikin Analytics members, the advanced decline line remains in an uptrend. It's pulled back a little bit this week with the market, but it remains in a steady uptrend, and that points to the level of participation we're seeing in this market. I look at an 8-day moving average of the S&P 500 stocks making new 52-week highs, and that continues to trend higher. Additionally, the percentage of stocks above their 20-day moving average remains above 40%. It has pulled back recently. So breadth, constructive. As I said, it's in the U.S., and as I said, it seems to be improving globally. So constructive breadth is a confirmation to our bullish view on the market in general. And as I said, healthcare equipment is oversold with bullish money flow. Here's ticker symbol XHE. The S&P Healthcare Equipment ETF, nice steady uptrend above the long-term trend line, leading the market since March, has become oversold. We looked at Baxter yesterday. That was an interesting name. Look at names like ConMed as well. Look at this money flow for the fund. Investors are coming in to the healthcare equipment stocks. A little pullback here generated the oversold condition if you are an ETF trader. I think that XHE is interesting here if you're looking for individual names. As I said, names like Baxter, names like ConMed are definitely interesting on the long side here and now. So, we would appreciate if you like what you're seeing, if you can help us spread the word, share our link on social media to our YouTube channel for this show, ChaikinAnalytics.com/PowerFeed-TV. And as always, you should sign up for the email so you can follow along with this call. Head over to ChaikinAnalytics.com/PowerFeed-TV to sign up. And just a plug, I will be on Market Watchers Live on Stock Charts TV at 12:20 this afternoon. Have a great day, everyone.